Good morning, everybody. I'm coming to you today from the Dallas-Fort Worth area. And so I'm in the hotel room. And so that's why it looks a little different. Randy looks a heck of a lot better because he's there at the office and he's got great lighting and everything. And Valerie, yay, Dallas. Yeah. Okay. So anyway, it's about the right time, Randy. Let's go ahead and get started. Anthony, there was a question on whether the presentation is going to be recorded. So in the chat, we've muted all the phones and stuff, but in the chat, you can ask your questions and we'll get to them. So thank you for attending this very special professional development webinar. We appreciate you using MEC as your preferred education provider. Hi, I'm Dave Luna. We do these webinars with hand-selected individuals and companies to offer additional value and training outside of CE. As a quick reminder, the at-risk to miss your license renewal deadline is December 17th. It's fast approaching. If you haven't done your CE and submitted your license for renewal, please do that right away. And with that short reminder, let me introduce to you Randy Sanzig. So Randy is a MEC student for over 8 years, currently a producing mortgage professional in Southern California. And we want you to know that we care about your success. So let's learn together. Now, being efficient and having the highest loan approval percentage is vital in this industry. Trust me, I know with over 40 years of experience, it's important on how to save time, ask the right questions to your borrowers. That's what we're going to focus on today. So, Randy, tell us a little bit about yourself and let's just jump into this thing and get started.
Thanks, David. Good to see you again, and good morning, everyone. I've actually been at this for 21 years now. Started as a loan officer and took the big leap and became the broker owner of Thousand Oaks Mortgage. Also own a real estate company. And I saw this industry and said, why are all these loans falling out? The industry average is about 65% submission to actual close. And I was running at better than 95% or better, with some lenders even 100% pull through, submit a loan to close for like 4 or 5 years in a row. I was averaging about 20 to 25 loans a month and only had one loan processor. Purchase loans, and some people say, don't tell them how many times you're late. But when I've spoken in front of other realtors, and I've said I've only been late 9 times in 21 years and only by 1 day each, they're in shock. They can't believe that. Well, the key to that is managing the deadlines. So, my business, 90% referral. And when I'm working with a rate shopper, when they call in and I conduct my interview, I close 90% of them. So, and in my spare time, I actually created a software program. So the LANIS Tier 1 product was based off of everything that I learned in this industry, and I built it into the software to make me more efficient, so I could spend, quite frankly, more time with my family. So the other thing we did is we brought the product to NAM, and they took a look at it, went into their technology review, and we came out in October of 2019 as a strategic technology partner, which is pretty amazing. So we've been at it for a while. It's tested. I use it every day, and we have a really good time doing it. So I just wanted to let you know that I'm actually boots on the ground. Okay, so I'm managing both the mortgage company and originating loans and also the software company. So everything I've learned, I've built into this to help you to be the most professional loan officer you can possibly be.
Well, Randy, hang on. As we go through this, I mean, sometimes life throws us curves. Sometimes, we get surprises in a loan application. So at some point during your presentation, can you kind of help, answer some questions and ladies and gentlemen, if you have questions for Randy, throw them out as well. But, will at some point during your presentation, will you talk about how to eliminate surprises in the loan application process? Meaning sometimes a borrower tells you some and it's not exactly correct. For example, a self-employed borrower says they make this much money and in reality it's kind of like this. So, I mean, sometimes life throws you a curve, right? So can you cover, will you cover, I don't want to throw, a curve at you like borrowers throw at us, but will you cover questions like that as well?
Absolutely. This
Okay.
presentation is meant to, and by the way, this presentation could be a 4 hour training class. Okay. But we're going to condense it down. We're going to hit a very top level of the iceberg. And so we are going to answer those questions. But real quick, using the SAM method for a self-employed borrower is absolutely critical. And then what you do is you take that once you've got your results and you put it in the loan file and you give it when you submit it. That way the underwriter's checking your work. They're not doing the work. But it's important that you understand the details and you're really thorough. Doesn't mean that you're going to spend a whole lot more time, but it does mean that you're going to be thorough and those loans are going to close. Okay. So some of the things that we're going to learn today is reducing those prior to document and prior to funding conditions. Those cost you time. The way you eliminate that is actually doing the work up front. Okay. You eliminate surprise conditions and circumstances that can cause the delays and the denials. And how do you do that? By having a conversation with your borrower, developing the relationship so they tell you more information. So you're going to close loans faster with less work. Okay. Now, using our software and just in the style in which we approach things, we save about 8 to 12 hours a week per loan officer doing loans. Where are you going to use that time? You're going to invest it in relationships and building your referrals. Now, loan processors. All right, I use a third party independent. A lot of you probably do. One of my team members asked Krista and said, "How many hours do you spend on Randy's loans versus somebody else's?" She thought about it and she said, I spend 6 hours less per file on his files than everyone else's. What does that mean? Your turn times are faster with your processor and cleaner loans go into the lender. So I'm going to state this again. Industry average close is 65%. Imagine if you were 95% or better in your close ratio. What is that going to do to your income? Amazing things. But let's don't forget what's the most important, greatly improving the borrower experience. That's where you get your referrals. Think about this for a second. When's the best time to ask for a referral? Not when you close the loan. When you actually, the borrower says, I want to go with loan number one or loan number two. It's when they're done with the interview process because they now feel comfortable and they feel that they've been treated not like a number, but like a very, very important client of yours. Okay, that's really key. Okay, now some of the important questions, and we call best practices. Okay, and this may sound simple to you, but believe it or not, you need to really cross-reference driver's licenses, make sure they're up to date. Paychecks, tax returns, W-2s, make sure the names are all the same, or put a letter of explanation in there for the underwriter. This is my legal name. Eliminate that prior to doc condition up front. Bank statements. If you've got a trust document or they're in a trust name, you may need to provide some trust information or trust cert. Do it up front. And what names are you going to use to establish credit? Again, a letter of explanation can help. All right. Now, the next questions are really pretty interesting because, who's going to be on the loan? Well, I don't know if I can have my spouse on the loan because they've got some credit issues. Well, okay, wait a minute. Got to understand that one because if you're doing an FHA loan, you're in a community property state, that debt's still going to get added whether they're on the loan or not. So that could mess up your DTI. Think about that one. Okay, who's going to be on title? Really important question to ask because sometimes some people aren't on titles. Well, that means that you're going to need to maybe have a grant deed so that they're not on title. Okay. The other thing about that is that, is there a pending relationship issue? And he says, oh, yeah, we filed for separation. Time out. You need an MSA, marriage settlement agreement. Otherwise, that loan's going nowhere, okay, until you get all the debt and everything taken care of. So when you're talking with your existing borrowers, ask them if there's been a change in their circumstances. Remember, it's a conversation that's building relationships. People like to talk to people they have relationships with. You're not a salesperson. You're a professional loan officer trying to do the best job for them. Okay. Now, let's talk about that subject property. Refinance for a person, pull a property profile and find out what the history is. You're also going to get the accurate tax information, property tax information. You can find out who's currently on title, what their if there has been any issues in the past, say a notice of default or something like that. Those are things that you're going to need to know as you're going to go ahead and submit that loan. Okay, property status. It's interesting. Single family residence or a PUD. A PUD could have an HOA. If you don't include the HOA, that could actually mess up your debt to income ratio. Details. Okay. A cluster home. Cluster home may look like a condo, but it's a cluster home. You don't have the condo ad. Changes your pricing. Okay. Room additions. This is a big one. You got somebody that says, hey, I got a 4-bedroom house, but title says 3. Well, wait a minute. Time out. Do they have a permit for that addition? If they don't, forget about doing a VA loan or an FHA loan. They may not, your lender may not lend on it. But it can also change the market value if it's unpermitted. That, alone can change your LTV and also your add-on fees. Okay, and if you've got a problem with the add-on fee, then you have a cost to cure. Who's that going to come out of whose pocket? Yours or the borrower's? Comes out of the borrower's, you're probably going to lose them. Okay, comes out of yours, then you really got an issue there. Okay, now the pardon me, if they have a solar system on the house, people think, okay, solar system will get them removed or subordinated or what have you. Well, the issue is that can take 2 or 3 weeks. Solar companies don't actually have the same sense of urgency that we have found, at least here in California, to get those things removed fast. So if you've locked somebody in for 30 days and it's going to take you 2 or 3 weeks, you just blew your lock. Think about that. It's going to cost you, the borrower, money. You don't want to make the borrower pay for it because you missed that detail. So you're building trust in the conversation. You're becoming a subject matter expert. Remember, that guy that's out there selling a no points, no fees loan, at this point in time, it's an absolute game changer. Understand questions, conversations. Find out, if you're doing a refinance, what the current balances are, liens that need to be paid off. Again, solar systems or energy efficient type of loans, principal and interest payments. It's important because as you go through the process, you're paying principal down, your loan doesn't need to be as high as what you originally thought. Okay, mortgage insurance. There's an interesting little fact. On FHA, it's the full month. Even if you close in the middle of the month, it's the full month of mortgage insurance. Changes your, for example, on a rate and term refinance, how much cash out, and what are you going to do if you get over $2,000? Okay, property profile. I can't stress that enough. We do that right off the bat. We need to know what's going on with that property and what kind of a property it actually is. We also need to find out if there's been any foreclosures, even on a purchase. Okay, if they're in the process of a foreclosure, some of these foreclosure processes can take 3 months. If you got a 30-day lock, guess what? You're going to have a real problem with your pricing. Change of circumstance. It could be an issue. So when you know the details, again, you can protect your locks. Okay. Subject property. Purchase continued here. Read the sales contract. Okay. And understand the contingency timelines. It's our job to manage those. Okay. Verify the close of escrow with the escrow people, but also make sure that those agents understand as well, because believe it or not, some of them don't. And understand the property condition before you order that appraisal. Believe it or not, Fannie, let's say they're in the middle of a remodel and you have an appraiser go out, but they got a hole in the wall. Fannie Mae will not lend on that property with a hole in the wall. And if the appraiser takes a picture of it, you're toast. Okay? Little details. They don't have their flooring in. That's a problem for Fannie Mae. They want to see flooring. Now, if you're going to paint and cement flooring, okay, fine. Just make sure you got the paint on the property. Okay. Now, reserves. Okay. What happens if that appraisal comes in low? Can you make up the difference? Is the borrower willing to make up the difference? Because if they're not, and the seller's not going to budge, the buyer's not going to budge, then that transaction goes away. We've actually saved deals by talking with the borrower up front. Are you willing to pay more? Are you willing to bring money into escrow in order to make up the difference? If they say yes, You tell the real estate agent, they just saved the deal. They're going to be your friend for life. Okay. Now, when I give a loan update, I don't give it to the buyer's agent first. I call that listing agent. Their own loan officers that they like to recommend their clients to, they don't give them updates. We call first, then we call the buyer's agent, and then we let escrow know. I had 15 realtors throwing business at me. 7 of them came from listing agents. Think about that one. It's a call, it's a soundbite, a voicemail. They hear your voice. They're not going to believe it. That level of service, because they're not getting it today. Practice that one. It's a good one. Okay. The reserves. Conventional versus jumbo loans. I just priced out a jumbo loan the other day. 24 months are needed for the primary residence. Okay, based on the loan to value. Couldn't believe it. 24 months. You need to make sure you have that left over. If you don't even bother submitting that loan because it's not going to go through. Okay. The property types. If they own multiple properties, second homes, non-owner occupied, remember there's a formula: principal and interest, taxes and insurance times 2 months or 6 months, depending upon the property type. But you also have another factor, and it's important to understand this: the unpaid principal balance. If you've got 1 to 4 properties, it's 2%. If you've got 7 to 10 properties, it's 6%, plus 6 months of non-owner occupied rental property. You got to make sure you have those kinds of reserves available. And if you don't, again, don't even bother submitting the loan because it's going to be DOA. It's just not going to fly. Okay. It's a guideline. Okay. And jumbo loans can be even tougher on investment properties. You just need to make sure you talk to your lender about that. Okay. Debt. What you don't know won't hurt you, or will hurt you, pardon me. What's listed on the credit report may not be all there is. You got to check the bank statements. Let's say there's a $500 deduction every single month and it goes to Uncle Louie. Well, is that a debt? Are you helping to paying him rent? What's the story? The underwriter is going to want to know, and they could, depending upon the circumstances, factor it in to the debt to income ratio. $500 can absolutely cause havoc with your debt to income ratio. Understand the student loans. A lot of them are in forbearance right now, but you still need to understand, because that could go away at any time. How do you factor in what the monthly payment is? Check with the underwriter or your account executive. Okay, car payments less than 10 months. You don't have to. Most programs you don't have to include those into the debt to income ratio. Tax liens, federal, state, county, or local. That could be a problem because, believe it or not, here in Thousand Oaks, we have a water bill and we have a water sewage bill. You don't pay that bill, the city is going to put a lien on your property. You're not going to be able to put a new loan until that lien gets taken care of. Think about that. Okay. That's the reason why you're asking questions. If they've had any remodels done to the house, is there any mechanics liens that might be hanging out? That's why you want to have a property profile. Sometimes you just don't wait for a prelim. You ask the title rep to do a deep dive so you can get the proper information so you can configure your loan. All right. So surprises can get your loan denied or cause delays. Don't waste your time, your loan processor's time, the lender's time. That all affects turn times, meaning how fast you close your loan. Cleaner loans bring faster turn times. Okay, you get paid faster. Wonderful thing. Okay, income doesn't have to be a mystery, but believe it or not, most loans are denied because of income. So when you're asking a client how many times do you get paid a month, they may say 2 times. Okay, was that 24? It could be, until they say, oh, wait a minute, sometimes I get 3 checks in a month. Well, they're getting paid every 2 weeks, not twice a month. Again, understand and make sure that overtime, for example, it has to have a 2-year history. Commissions and bonuses, 2-year history on average. But here's one key point. You got a commissioned salesperson in a new job. It's not the same industry. The underwriter may not allow may not allow that commission income because it's not the same industry. You need to understand that one. Okay, new job, working on a jumbo loan right now. Need a countersigned offer letter. Okay, not one that's not approved. Okay, a start date, a salary, one or two paychecks may be required. Again, check with that underwriter. And it's real important, that little detail, because we've closed them with one paycheck, we've closed them with two paycheck, and that was mandatory. We couldn't fund until we had two paychecks. Do the homework. Okay. Uh, self-employed. Some lenders are self-employed borrower friendly. Some not so much. Okay. We have about 72 lenders we work with, and it runs the gamut from conventional A plus to, yeah, we're self-employed friendly, all the way to fix and flip and construction, which, by the way, you need to consider based on where the market is today and the way interest rates are going. It's really important to understand the Schedule C and the Schedule E, and that's where that SAM document comes in. It's a calculator. Plug in the numbers, it gives you an answer. It's real. That's what the underwriters are using. Love this one. Teachers and professors, how many months do they get paid? Some of them get paid 9 months. Some of them get paid 10, 11. Some of them even get a 12th check, okay, even though they're only teaching 9 months. But guess what? That 12th check is probably 20 to 30% lower than what their standard check is. So you need to take into consideration all of the checks, get your monthly average, and that's what you use in your DTI calculations. Social Security. A lot of people go, yeah, we can bump it up 25%. Top line of the Social Security says they make X amount of dollars per month, and then there's all these other deductions. Take that top line and times it by 1.0375%, and that's what you gross up. You can't use a standard 25%. It doesn't work anymore. Also, if you're doing tax returns, okay, you need to take a look, because they're going to take the percentage difference between what's taxable and not taxable. You need to understand those little details because that has an effect.
So, Randy, are these things in your software that does the calculation for us, or do we need to remember these formulas?
Believe it or not, there's over 700 calculations and decision trees in the software. All right. We say put your calculator down. Okay. I have an HP calculator, but I can't figure out how to do a payment on it anymore because I don't use it. But yeah, all this information, by the way, and David, thank you for bringing that up. You can see a little tagline here at the bottom. It says golanis.com/training tips, videos. Everything we're talking about today is in 2 to 5 minute videos per topic. Okay. There's over 30 training tips up there. And I talk about a lot of these things inside the training tips because it's how you package a loan. It's also how you use the software. Shortcut tips. Okay. So, one other quick point here, retirement income. If you're going to count it, make sure it's going to be around for 3 years from the note date. Okay, if you got 2.5 years left of your retirement income, you can't use it. Okay, again, details. All right. So income calculations are the major reason loans are denied. You really have to do your homework up front. Okay. Now, reserves. This is the fun part. Okay, reserves, we've already talked about that a little bit, but you need to follow the guidelines. You need to follow and see if there's any credit overlays. Jumbos, you can have a lender with 6 different jumbo programs. The reserve requirement can be different for each one of those programs. To become a subject matter expert, send the scenario off to your account executive or to your underwriter or your scenario desk and ask them what is needed for this loan. It'll save you so much time and energy. Do the math, and away you go. By the way, our software does all the math automatically, no matter how many properties you have. It just figures it out. You don't even have to think about it. Put in the property, the actual loan balance, their monthly payments, combined PITI, and what they charging per month. It'll do all the calculations on what you need. So again, a simple thing, but it can be complicated. Okay, gifts, close family members. Okay, a cousin cannot really give you a gift. Okay, it just doesn't work that way. The paper trail is absolutely critical. You need to have it coming out of their account, prove that they have the ability to give the gift, and also coming into your account. So a complete paper trail is absolutely critical. The other thing is that if you're paying off debt to qualify, make sure you just haven't depleted all your reserves that you need for the loan. Little things, okay? So we want to avoid big surprises for underwriting that cause a loan to be denied. Take the time, double check the work. All right, loan prices. This is really important, okay? You got to understand the base price, okay? And the LLPAs or any add-on fees must be configured properly. Some programs, believe it or not, rate and fees, okay? Or both can be added. That origination compliance, 3%. That's a hard cap. If it's 3.01, you're out of compliance. Your loan will not go through, okay? So make sure your numbers are accurate when you're pricing out a loan. Okay, use that scenario desk. It's a tool, all right? It only takes a few minutes. Send them an email. They'll get back to you. The key is take that scenario, put it in your loan file, okay, when you submit it, because now you have somebody from the company verifying the information or telling you what you actually need, and then you back it up with your documentation. Now, when we price out a loan, and by the way, we put 5 loans side by side, we always look at buying down that rate and then the no points, no fees. We just did a purchase transaction, and the guy says, I want no points, no fees. And I'm going, okay, that's bragging rights at barbecue. He says, you bet. And I says, okay, the difference between loan 1 and loan 5 is $54,987. So you're going to be in that house for 30 years. It's a buy and hold. You want to spend $54,000 more in interest? And the guy said, I had no idea. I said, no points, no fees, bragging rights. Stop listening to the radio. All those guys are doing is trying to get your phone to ring. Okay. You may
So,
not be.
Randy, your software then puts out these different loan scenarios, whether it's no point, no cost, whether it's just regular, normal, just 3% down, whatever the cost is for the down payment, closing costs. Your software can run all of these different scenarios, and you can I think you said like 1 to 5. Then you can present those options to the borrower, and the borrower can pick what is best for them in their particular scenario or where they are in life right now. Correct?
Absolutely correct. We just had a nice young couple, and I sent them over our 2 page, and it is a complete financial analysis. And the gentleman called me back. He says, Randy, if I'm reading this right, he says, and by the way, we're going to sell the home in 7 years because we're expanding our family. We're going to need a bigger home. He says, loan 4 looks to be the best. I said, absolutely correct. It's math. There's only one right answer. So it showed him what money he was going to save with his refi, but it also showed him what the return on investment was and the cost of money. 7 years, loan 4. He says, by the way, Randy, he goes, you're $3,046 higher than some of the big guys. I said, yeah, I know. I said, let me show you where I pad my estimate. I says, our policy is we don't do a low ball estimate. We quote 30 days prepaid interest. By law, you got to have 15. I said, our appraisal fee, a little higher. We've got a few other fees in here we've padded because we don't do low ball estimates. Okay. Our job is to manage the bottom line, and we don't have any surprises at the closing table. Okay. So don't lock your interest rate until you know all the borrower information, the loan requirements, and the property details. Some people lock right away because they figure, okay, I got them. No, you don't. You don't want to have surprises coming down the road because you didn't do your homework. Okay. Now, closing costs. Again, I just touched on that, but understand the tolerance levels in that loan estimate because that can really get you into trouble. Compliance issues and the cost of cure can be expensive to the loan officer and the borrower. Our policy has always been if you make a mistake, weed it. Okay. I've made only one mistake in 21 years. It was an add-on fee when the lender issued it that day on a rate sheet, quarter of a point, cost me $1,000. Called my brother who had a 16-person broker shop and said, what do I do? He goes, macaroni and cheese. Policy is we eat it. Cost me $1,000. Never made that mistake again. Okay. Loss of trust from the borrower means referrals are out of the question and they may even pull out. Okay, loss of income to the loan officer. We are professionals. It's okay to disclose our fee. You know, I'm more than okay. I've done it for 21 years, and everybody said, "Well, you're very transparent." I said, "That's true. I am. I'm also black and white." Okay. You don't want to lose the loan. You don't want to lose the referrals, because the referrals is how you build your business and have a sustainable business. Okay. That's really key. I mentioned prepaid interest. Again, I've seen a lot of competitors' quotes come in with 7 days. Well, that's a lowball estimate. It's also illegal. Okay. Property taxes, impound accounts. If you're not sure, call your escrow officer. They'll tell you how many months are needed for property taxes. I always figure 3 months for insurance. And at that point, we're always good. So, again, accuracy is key. Don't issue lowball estimate. And surprises are going to, at the closing table, is going to cost you referrals. It really is. Okay. Good surprises, you're going to get more referrals. Okay. This is where we fit in. Okay. Our software is designed to fit in the middle between a POS, which is a point of sale system. You gather borrower information. On some systems, you push a button and you can get an AUS approval. Problem is loan officers still need to verify that information. You still need to verify the borrower's information. You still need to have a conversation with them. The loan origination software system is a loan processing tool. So we're basically a sales origination tool that just happens to provide a 2-page financial analysis that takes all the guesswork out of which loan. Yeah, David.
Randy, your system communicates with the loan origination system with like a Fannie Mae 3.2 file. Yours fits in that middle spot perfectly. Is that correct?
That's correct. We do 3.2. I have 3.4. I've been testing it. Okay. One of the reasons being is some of the lenders, we have to be honest with ourselves, the industry did not have the best elegant transition to the new, transmission, format, the new Fannie Mae format. So we've been testing it with multiple systems. And right now, we're going to be releasing that, I'm going to say probably in the next couple of weeks. But so you can put a 3.2 file into our system and bring it out 3.4. It does all the conversion.
Okay.
2 clicks and you're done. Okay. Already pre-names the file. Beautiful thing. So let's talk about the summary here and what we've learned today. Okay. Take the time to have a conversation with your borrowers. Build that relationship. Details and accuracy are key elements to your pull-through. Build trust. Integrity is everything. LANIS, by the way, is Loan Analysis Network Integrity Solutions. Okay. It's built into our blood. Okay. Be a subject matter expert. You're not a salesperson. You're a professional loan officer, and your job is to provide the best financial solutions to your borrower. They make the selection of the loan. You've done your job. You're a trusted mortgage advisor. You're not selling a loan. Okay. So the interesting thing here is the technology you're using today may hinder your professional growth and your business. You need to rethink, especially this time of year, because we're getting ready to start a brand new year. We want to have a better year than what we had last year. Okay. Now, people are talking about, higher rates, lack of inventory. If you notice that you're probably getting emails from non-QM lenders, hard money lenders, private lenders, fix and flip lenders, you need to understand how to put those loans together in order to have a sustainable business. Our software already does that. It will actually walk you through how to put together a non-QM loan or a hard money loan. Okay, you select hard money. It's going to, do you want to add to the fees? Do you want to add to the rates? Do you need to do both? So your pricing is accurate. Your account executives, your company's going to love you. So change the game. Okay. Borrowers want a financial solution. They don't want you to sell them a rate and a loan. They want a professional loan officer who provides the best financial options for them. It's not about our paycheck. We remove the dollar signs from our eyes. We are going to become a more professional loan officer. Okay. That's absolutely key. So again, the items we discussed today are here at this URL. Feel free to go there. It's free. The URL, also, look under the resources tabs. There's 92 different things there. You want to find out what the new loan limits are? They're going to be there next week, Monday, I believe. And the SAM method, it's there. You need a CFPB disclosure, 77 pages. It's there. Download it. It's all free. Want to go check a condo, see if it's approved? It's there. Okay, seriously, 92 AVM links. We built it so that you could be more efficient, have more information at your fingertips, and do a better job for your borrowers.
Randy, as we wrap up, we always want to give MEC students just a really, really good deal. Okay, so what is it that we can offer these people that have taken time out of their days, the last 35 minutes, time out of their days? What is it that you can offer them that would help them, maybe make a decision whether they do or don't want to buy this software?
Thank you for the question. What we did is we created a special promo code and a special program for MEC customers. Okay, MEC 2022, all capitals, MEC 2022, and you can go to our website. You can sign up. You don't need a credit card. Okay, and you're going to get a 30-day free trial.
So I get to kick the tires for 30 days. I get to run the system. I get to look at all of these pages, these video trainings. I get to do it all. 30 days. You don't have my credit card. I get to see if this might work for me. Is that correct?
That's correct.
Okay, cool. I didn't mean to cut you off. I just want to make sure I understood. Please continue.
No, it's a smoking hot deal. So the one thing that you can do now, this is the other plus. Okay, not only will you have all those resources up there for free, but if you go to request a demo, it will actually say 15 minutes on my calendar. But just put in the notes, hey, I want to review a loan with you. Okay, so we're going to do some coaching. All right, it'll send you back a Zoom confirmation link. It'll be on my calendar, and we can spend 30 minutes and talk about the loan. All right. I have one loan officer. They were working on a VA loan. Couldn't believe this. They said, I want to review the details and make sure I got it done right. It was so fast, I couldn't believe it. So all that math that goes in there, we got it all done. So that's free. Okay. We want to help you do the best job you possibly can for your borrowers. That's our mission. Okay. Let's become more professional in what we do. Let's change the game. I know that there's some sales managers online. They're probably going to not like me for this statement. Our job is not to sell. Our job is to provide the best financial solutions for our borrower. It's all about the borrower experience. If you do that, referrals will come. One interesting point, I haven't advertised since 2012. Don't have to. It's all referral.
Randy, there's people that are asking questions in the chat. So we have Stephanie. It says, during the demo, are you able to show us how to get that report on a specific loan?
Absolutely.
Okay. Then another individual asked, well, how much is it for an individual new to the industry that works with a brokerage that has 140 lenders?
That would qualify as what we call an enterprise. Okay, now the base price of the software is $85 a month. Okay.
What?
$85 a month.
That's it?
Yeah, I know. Oh, and you're getting a 10% discount, by the way. If you use MEC, all capitals, MEC 2020, I forgot to
2022, 2022.
I'm sorry, 2022. You get a 10% discount, no credit card, and a 30-day free trial.
I like it. I like it. Ladies and gentlemen, before we wrap up, again, we're trying to be mindful of your time. Does anybody have any specific questions for Randy? Does it help process loans, Eric asks?
Absolutely. I mean, my loan processor loves them. All right. When I turn over a file, seriously, I mean, she's got an easy loan to do. My turn time is faster. I close faster.
Adam asks a question. So while we're using the system, did you say, Randy, that we can have someone at your company verify and walk us through, the loan scenario to make sure that we did it correctly.
Absolutely. Just use the request demo, put in a note, I want to verify a loan. Good to go.
Great question, Adam. Is the price? Hang on. Is the price come as a per user?
That's correct. $85 per month, 1,020 per year. So yes, it is an individual subscription.
Okay.
If
How
you're
long?
if you're in an enterprise, pardon me for interrupting, if you're in an enterprise, is there a possibility of doing discounts? And that is yes.
Okay. How long do we have to take advantage of this? Really cool deal.
I forgot to put in there that it was only 5 days after this webinar.
Okay.
So
So,
you can
but they can take advantage for 30 days,
correct.
right? Okay,
Correct.
okay, okay. So they can again drive it,
Yeah,
test it, verify it, put their scenarios in, check it all out. They can do all of that for 30 days, right? Before they, make a decision. Is that correct?
that's correct.
Okay. Adam asked, can they put their logo on the report? Giving the borrower the 5 different loan options. I'm using the number you use. It may be more than 5 options, but can they put their logo on that?
Yes. In fact, all you have to do is have a nice clean logo, upload it to the system, make sure you got your state licenses and your NMLS licenses, your contact phone numbers. All of that comes out on the summary sheet. So
Nice.
your borrower knows how to get in hold of you, but you've also branded your company name.
On OB, Optimal Blue, FlowFi, does it work with those other software providers?
We are in conversations with these other providers. Okay. And, by the way, that is a great question because I have a loan officer that was using Optimal Blue.
Yeah.
And I showed up with my UWM rate sheets and I said, okay, let's configure loans together. I was done faster. But are we going to integrate that to where we can upload information into Optimal Blue or Lender Price or Ready Price or Mortec and then pull that information back into our software? The answer is yes. So that is a key development. It's on the roadmap.
Okay. So my company's already using another CRM. Can I use GoLANIS personally?
We're not a CRM, okay, but think about this for a second. Some CRMs will export a 3.2 or a 3.4 file. That can come directly into us, so you don't have to retype everything. It'll save you a whole bunch of time. And then you just export it back out to your LOS. So, are we going to do some further integration with CRMs? The answer is yes.
Okay. Someone asks, what is the enterprise price monthly? Enterprise for the whole company.
That would depend upon the size. It would also depend upon the training requirements. So it's kind of a customized pricing, but the simple answer, would it be less? Yeah, absolutely.
It'd
Volume
be
will give
less.
you
Okay.
discounts.
Okay, cool. Does it integrate with, for example, Calyx Point?
I use Calyx Point. Okay. I have for 21 years. Calyx Point is what we call a legacy system. In our 3.2 implementation of transferring information back and forth, it's not been real elegant, but our developers, which by the way are based in El Segundo, California, we actually fixed some of their problems. Okay, so in other words, like in the REO section, we've mapped it to the point where it comes into us clean and it populates into them clean.
Excellent. An individual says they're working with a bank. Would it make sense to have this software?
Absolutely.
Um,
you know, Typically in a bank, you're a one loan option kind of thing. With us, you can actually provide your borrower with up to 5 different loan scenarios and then put it into your bank system. And at that point, then you can disclose it from there.
Stephanie asks, what about Lending Pad or Arrive? How does it incorporate with those software systems?
We actually subscribe to Lending Pad as well. It's one of our test softwares because it's one of the newer cloud-based systems. Okay. I can tell you right now, it's working really, really well. Our developers are loving it versus working with Calyx Point because it's a newer architecture and Calyx Point 1990s late. I mean, my brother was one of the first users of Calyx Point to give you the history. So With Arrive, you have to understand 3.2, 3.4 are generic. Those are industry standards for transferring data back and forth.
So it
So
doesn't really matter.
doesn't matter.
Okay.
My have a company website generates a 3.2 and a 3.4 file. I just auto populate it directly into our software. And then from
We,
there, I put it in the LOS.
we only have 1 minute left. Again, trying to be mindful of everybody's time. So these are the last two questions. One, is the software cloud based or Windows based or what is it?
It is cloud based. Okay. Believe it, this is a funny thing. It even works with a Mac. Okay. And their internet browser. Okay. We don't support Internet Explorer 11 anymore because Microsoft has basically discontinued it. But all the other popular ones, yeah, we've tested it against that.
Okay. So is it just a loan scenario analysis software or is it a loan origination system?
Hmm. It is a financial loan analysis software. Uh, is it an LOS? Not today.
Okay. 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 Well, Maria thanks you. Others are thanking you. So again, Randy, thank you so much. This is your phone number. This is your web address. This is your URL. This is your email. We want to thank you for taking time out. And again, for hey, we get to try it out for free. And then if we want, it's not really that cost prohibitive. And so we really, really appreciate Randy you taking the time to visit with us today.
Don't
And with
forget the
that,
10, I was going
go
to say,
ahead,
don't
Randy.
forget that 10% discount. That's
Okay.
only for you guys. It's only for MEC,
All right.
customers. So
All
yeah,
right. Thank you. We've gone a minute over. So anyway, I want to thank everybody. Happy holidays. Yes, I can say that. There are 14 holidays from the end of November to the end of the year. And so whether you celebrate Hanukkah or Christmas or Kwanzaa or any of the other 11 holidays, happy holidays to everybody. Sure appreciate you guys. And we will talk to you later. We'll send out a copy of this recording just as soon as we get it. Don't be surprised if it actually comes out a little later today. And with that, thank you, everybody.
thank you. Have a great day. All the best in 2022.